Republicans paid lip service to the idea of fixing the problem, but they didn't put their energy behind it. They didn't put their shoulder into it. And Democrats were just focused on the fairness issue. Race, being sure we help small towns, being sure we help poor people, all good goals, but they were taking their eye off the potential problem.
I'm afraid the Democrats are a lot more culpable than the Republicans. The Democrats, Barney Frank, Chuck Schumer, have been the key supporters of Fannie Mae and Freddie Mac for many, many years. And they have always tried to use Fannie Mae and Freddie Mac for their own political benefit.
And while all the financial details behind these problems are so complicated that a room full of PhDs would have trouble understanding them, the basic story isn't that hard to tell.
When we come back, the crisis in a nutshell. Many Americans just don't understand what this financial crisis is all about. We've been told our entire economy could collapse. But how can a tiny fraction of mortgages... I went to one of the nation's top business schools to find out. Professor Robert Wright teaches credit and derivatives at the Stern School of Business at the prestigious New York University. We asked him for the same PowerPoint presentation he gives to his own MBA students when he explains the financial meltdown to them. So how do we get from a $250,000 house, the sale of that house, to the worst financial crisis in my lifetime?
It starts simply enough. The homeowner...
Professor Wright says it all starts with a family buying a house with a home loan from their local bank or a mortgage broker, like they used to do in the old days.
Well, yes, that's right.
What's different is all the subprime loans you've been hearing about. They're given to people who wouldn't have the credit to get a loan in the old days. Many of the loans required no down payment and charged tiny teaser rates that would jump higher after a few years. So the borrower signs the loan documents. Then comes the next step.
Most mortgages these days are sold to other investors in a process called securitization.
That's where the financial whizzes do what Wright calls their witch doctorate. They buy bunches of these subprime loans, package them together, and turn them into a brand new financial instrument called a mortgage-backed security, or an MBS.
The MBS is then sold to institutional investors like life insurance companies or pension funds, or it is sold to investment banks.
The big investment banks, in turn, combine a bunch of MBSs into even bigger debt instruments called collateralized mortgage obligations, or CMOs. And then Wright's lecture gets really complex.
And then the CMO is broken up, as I'll show you on the next slide, and is sold, again, to institutional investors or investment banks who will hold it. And this is the real dangerous part here. The CMO is repackaged into what are called tranches, or different risk categories, some of which are very low risk and also offer low return. And then as you move down here, as the grade gets lower, you're taking on higher risk for higher return.
Folks, don't worry. Even some of the sharpest minds in Washington and Wall Street don't fully understand this stuff. Suffice it to say that all sorts of banks, insurance companies, pension funds, and the rest snapped up these tranches. That meant two things. First, even more money was pumped into the house market to fund even more subprime loans. And second, the balance sheets of an untold number of financial institutions depended on those less than creditworthy borrowers keeping up with their monthly mortgage payments. Then the disaster the financial witch doctors didn't count on. Housing prices, inflated by all those easy-to-get mortgages, dropped, and an unexpectedly high number of the subprime borrowers stopped paying each month.
So why are the default rates so high? Because if you borrowed in through here, to buy a home or to refi, and now the value of your home is down here, you have negative equity. You're in the bucket, so to speak, on your house. So why make the payments? Why pay on a mortgage for $250,000 mortgage when the house is now only worth $200,000?
Well, particularly if you put no money down. And a lot of those loans, you didn't have to put any money down, so you had no skin in the game, so you could walk away.
That's right.
The big investors thought they had a safety net, credit insurance. But when too many homeowners stopped paying, the credit insurers defaulted too. Now, simply put, nobody knows how little these mortgage-backed securities are worth. And that means nobody knows exactly how much the institutions that hold them are worth either. And that, Professor Wright says, puts the world's largest and most sophisticated economy at risk.
Banks don't want to lend to other banks. And so banks can't get new funds, so they have to stop lending to Main Street. And most Main Street firms need access to loans, or they have to shut down or cut back on employment. So the real economy is beginning to suffer because of this.
Professor Wright's lesson ends with a historical footnote that'll really get you. We should have seen this coming.
6 times between the Civil War and World War II, mortgage securitization schemes in the United States blew up.
So we've been here before.
We've been here 6 times before for precisely the same reasons.
With this train wreck so predictable, why didn't anybody stop it? Some did try. That story when we return. Meltdown on Wall Street. How can our most important financial institutions hold so much bad debt without anybody doing anything about it? Well, the truth is a lot of people saw the problem. And had others acted on what they said, we wouldn't be here right now. Here again is Chief White House Correspondent Bret Baier.
In April 2001, during the Bush administration's first year, the White House saw danger on the horizon. In their budget request for the following year, the administration recognized Fannie Mae and Freddie Mac were, quote, a potential problem, and noted that if either were in trouble, it could, quote, cause strong repercussions in financial markets. But the markets had reeled when the dot-com bubble burst, and then they were hit hard by 9/11. Few wanted to hear gloomy talk about what seemed to be the one bright spot in the economy, the boom in real estate prices. By 2002, one powerful voice, the Wall Street Journal editorial page, was starting to send up flares.
When housing prices start to go up 10, 15, 20% a year, you know that just can't last.
Paul Gigot is the editorial page editor of the Journal, which was acquired by News Corp, the parent company of Fox News, in 2008.
You add that to these institutions, Fannie Mae and Freddie Mac, which channeled so much money from abroad into housing because investors could channel some of their savings into these mortgage-backed securities where they got a really nice deal because they got a nice yield. So they loved channeling money into these instruments, and that flowed right into the housing market.
And few in Washington, on Wall Street, or along Main Street wanted to hear about the risks.
They had so much political support, both in Washington, because the members of Congress were bathed in their campaign contributions, and they loved all that support from Fannie and Freddie, and then from Wall Street as well, because Wall Street could sell those mortgage-backed securities guaranteed by Fannie Mae, guaranteed by the taxpayer, and they made terrific fees.
Gigot says that when the Journal tried to question what was happening in the mortgage market, he ran right into what he calls a Fannie Mae, Freddie Mac buzzsaw.
I just remember one episode regarding the former CEO of Countrywide Financial, Angelo Mazzillo, and he got right into my face and started yelling at me and said, "You don't know what you're talking about. You don't understand the mortgage markets. You're in the pocket of the competitors of Fannie Mae and Freddie Mac," and went on like that for a while. So it is an illustration of the degree to which people who were part of this mania didn't want anybody to say, "Are you sure this is the right way to go?"
They were thugs. And where you crossed them in any way,